Hi, I'm Steve Dudash at IHT Wealth Management. Welcome to this week's Wealthcast. So I want to do a little 6-month recap, middle of the year recap. You know, earlier this year we threw some ideas out there of what we thought we were going to see this year, and it's good to judge every once in a while how you did. So a few things. One, we said the markets aren't going to take off like they did in 2017 because a lot of those returns that took place in 2017 were because of the tax bill and the hope around that, what it would do for the economy. So that drove up prices a lot, stock prices a lot last year. This year, there's no more tax bills, so we were saying it's going to be middle of the road, like choppy, and that's what it's been for the most part of this year. You know, the trade war has hampered things. Some of the economic data, though good, has been offset by some of the political things that have been going on, which have been bad. So we've been middle of the road most of the year, but we were spot on saying that was going to take place. Told people to look international. That's definitely been right. You know, there's a lot of less expensive opportunities overseas than there are in the U.S. because our market ran up so much last year. That's been really good. We told people, look at small caps, look at small companies that take advantage of, you know, again, take the politics out of this, the whole make America great, bring everything back to the U.S. and all the stuff that's been going on with that. Well, small companies tend to benefit from that, whereas large companies, especially from tariffs and trade wars, get hindered from that. So small companies have outperformed, internationals done well. We told people to watch out for Bitcoin. We were spot on there. It's like half the value it was earlier this year. There's no math behind it. There's just no math behind it. There's no economical reason why it's at where it's at. And we said that, and we've proved to be very right there. And Tesla, you know, I like the owner, I like the car, I like the company. I don't like the stock. You know, they don't make any money. They bleed through a lot of money. Doesn't mean I don't hope that they'll be great one day. But it's a tough thing to buy, and we were pretty spot on with that too. So, second half of the year thing, I want everyone to kind of keep the same theme. Everything else is going to be kind of the same. The one thing you guys got to be aware of, and really want to start looking at where you're positioned, is inflation. Inflation is going to start rising. Energy prices have gone up, and so they were a lot lower before, helping keeping pricing down. Energy's going up. Tariffs, you'd think this would have blown over by now, but apparently we're gonna go forward with this tariff stuff, which is just dumb. But tariffs are going to happen, which increases pricing. Wages have been going up, which is going to increase costs. So those three things, for the first time in a very long time, we're going to start talking about inflation again. Not like what it was in the 80s, but we're going to start talking about it again. So be careful. Make sure your portfolio is positioned in a way that's, for the first time in a long time, inflation sensitive. So hope this helps. We'll talk next week. Have a nice weekend.